All right, guys. Sorry for that delay. I apologize. So I have been dealing with like a major sinus infection or allergies or whatever it was the last week or two. So I apologize for not as much content as I usually get, but I wanted to jump on here live with you guys this week and go over some of the most recent questions and comments that I've been getting from you guys in the comment section down below. By the way, if you're new to the channel, my name's Jay Costa. Welcome. I am a real estate agent, investor, and builder here in Northern New Jersey. And if you get value out of this live stream today, smash that like button down below and also consider subscribing. On this channel, we go over basically real estate investing as well as how to use your home equity using a home equity line of credit in order to build wealth in real estate, specifically faster than you would without that home equity line of credit. So if you want to learn more about home equity lines of credit, definitely check out my custom playlist. You can go to my channel. I don't know if it's in the description right now, but check the description. It should be in there somewhere. And yeah, definitely. So today we're going to be going through all of the comments in the comment section that I have. Some of them I got back to you guys through the comment section, but I still wanted to go over and share with you on video. Some I have not. And if you're live in here, go into chat. Let me know where you're from, what your name is. If we met, let me know. And if we haven't met, let me know. And I will answer any questions that you have there. And like I said, I've been a little under the weather. So if I'm like coughing or sneezing or something, excuse me just for today. All right. So, and I apologize also for the delay. This is supposed to be at 1:30. And I was having a little bit of technical difficulties, and I'm hoping you guys are getting this now. I just want to make sure that you are. So it's saying that we're live here. All right. So I'm just going to get started here and go right to the comments section. Let's see what we could do. Here is the comment section. All right. So first, Danny Cow 4134 says such a great video, very informative. This is about the investment property, using your HELOC as an investment property. That was a really good video, in my opinion. If you're thinking about using your HELOC in order to buy a long-term investment property, this is a must watch video. Nathaniel Green 290 says, hello, Jay. Question: do you work with different lenders that provide HELOCs, cash out refinance, and commercial refinance? I do. I'm going to reach out to you directly, Nathaniel, or you could shoot me an email as well. We'll get in touch after this. Robert Quinn says, learn stuff. Glad I came across your channel. Thanks. This is how to choose a HELOC lender in 2024. Another great resource for 2024, finding a HELOC lender. DQ says, great insights. Okay. Now, Ashley Richardson, let's get to the meat and potatoes here. Ashley Richardson says, Navy Fed doesn't do HELOC on duplex, and Bank of America doesn't do investment properties. This is true. So, but as you can see, Ashley, this is from 2023. Things have changed since 2023. Investment property HELOCs are much harder to come by. And when I say investment property HELOCs, I'm talking about when you already own an investment property and you're looking to use the equity on that investment property in order to go buy another one. You know, the market has changed, unfortunately, and credit just got much tighter in regards to home equity. All right, so Kira Buenrostro says, Jay, do you own any long-term real estate? Do you only focus on flips? I did already answer this. So I actually sold all of my long-term rental properties. I didn't have some big, huge portfolio, but I did sell them off in order to get capital, in order to focus on, as you see here, new construction. And if you want to learn more about that, I have been doing, I've done a couple videos on the new construction duplex project that I have going on here in this area. In that project, we basically knocked down a two-family. So I was originally going to buy the property as a long-term hold rental property. I was going to fix it up and rent it, but the market started changing very quickly. This is about a year and a half, 2 years ago, and the rates started popping up. And I decided to renegotiate and then basically knock down the property and build a brand new duplex. And when I say duplex, I'm talking about two separate basically townhouse units side by side. Actually, we are under contract on one of those units right now, so I'm going to have an update for you on that very, very soon. So definitely hit that subscribe button to keep up to date, as well as that little notification bell. All right. And by the way, Kira and everyone else, the reason I've done that, let me come back on screen here. The reason I did that was because in this area, this is a high cost of living area. I'm right outside of New York City, which some of you may be able to, maybe in the same situation. I look at long term and I deal with long term rental properties, seeing what they go for every single day. And in this market, even before the rates started going up, it was very, very hard. It's basically impossible to find a property that even comes remotely close to cash flowing. And the reason for that is people buy these in areas like these, or in this area anyway, banking on appreciation. And frankly, I can do better, in my opinion. I could do better instead of having my money long term in a property that a lot of the times I'm coming out of pocket for in order to stay afloat. I could do better with that money simply putting it in an S&P 500 index fund or something like that, while I go build a real estate business on the other side of my time, right? And basically use that time that I'm buying in order to not have to deal with tenants and repairs and things like that, and go find legitimate development opportunities. That way I could then take the money from the index fund or savings account or whatever, wherever I have it, and put it into a new development project. And then you have a lot of different options. You could sell that property, you can keep that property and rent it out. And in this area, in my experience, that's where it's a much more profitable venture if you're involved in the, from the ground up new construction development. So that's why. All right, let me get back here and go back to your comments. So Valerie Walton says, I'm starting my homework. However, I am curious. It sounds like I should stop, or I'm sorry, I should shop and then apply once for my HELOC. Is there any impact to my credit score if I apply for three at the same time? So, by the way, I said lice here. Wow, I am really under the weather. Sorry about that, Valerie. But yes, I don't think in my experience that you have the same credit protection when it comes to hard pulls on your credit score with a HELOC as you do with like a standard mortgage. I don't think. That being said, I wouldn't let that stop you. People are always so crazy over inquiries on their credit. It's a temporary small drop. It comes back up in a couple months. I don't think you need to go apply to 10 different HELOC lenders, but apply to three. I wouldn't let that stop you at all. Like, so what? Your credit score goes down by 20 points because of it. It'll come back up in 2 or 3 months. I wouldn't let that stop you at all. I wouldn't let that delay you at all whatsoever. And let us know, let us know which lenders you're going with. So Barbara Wait 5395 says one emergency. So this video is, should you use HELOC to pay off credit cards? Watch first. That's another good video. That was a little older, a little while back. One emergency. I wish. Thanks for the info, and I'll be looking at your playlist to see if there's more info that applies to my family situation. In a nutshell, husband and wife both now in SSD and fixed income, just over 150% of the FPL. So we qualify for very little in assistance. Love to see some advice for those of us at the bottom of the economy, but still lucky enough to have significant equity in our house. Social security or disability. What is that? What does SSD stand for? I'm going to have to get some more information. I'm curious about your situation, Barbara, because any way that I could, give people value, I am very interested in doing so. So I'm going to respond to this right after this, and we're going to get in touch with each other. Sarah Lauer 1551 says, once the repayment period starts, are you only paying principal since you just paid interest for 10 years? No. The answer would be no to that. And the reason for that is, so the first 10 years on a HELOC is what's called the draw period. You're allowed to draw off of from your HELOC and pay. Your minimum payment is interest only. You could always pay it all off at any time, of course. After 10 years, I'm just giving you a little background, you guys. After 10 years, you go into the repayment period. And when it goes into the repayment period, you're not just paying, excuse me, you're not just paying principal, you're paying principal and interest. So let's say after the 10 years, you have a $100,000 HELOC balance stacked up on you. You're not just paying off that 100,000, you're paying off the principal of the 100,000 plus the interest of that 100,000 sitting there for as long as it is sitting there. So it goes from interest only to interest and principal, not interest only to principal only. So make sure you're aware of that. Back to your comments here. So Kira, we just spoke to Kira, I believe, up here. Yes, we did. Can a lender call out the balance on a home equity loan at any time? Yeah, it depends on a lender, but yeah, I believe that most do make you sign off that they can do that. Kira also says, is it a good idea to use a mortgage company for a HELOC? I said probably not. I tend to almost always suggest for HELOC lenders, not your mortgage company, not a big national bank. I would start with a local credit union, give them a shot. And after that, I go to like a small regional bank if you don't find any good credit unions. The credit unions tend to always be the most competitive for whatever reason. I think the biggest reasons is because they know the area that they're lending in and they're the most familiar with that area and they're most comfortable with lending in that area. So start with a credit union. Just go on Google, type in your area, zip code, whatever, town name, HELOC lender or HELOC credit union. See what comes up. If you don't find anything there, go to go to a more local regional bank. And by regional, I mean like, there's a handful around me, but something that's in your state or in your, the few states around you, not like a Bank of America or Chase or something like that. They tend to be not as competitive. And also check out the online ones. PenFed is a big one, I know as well. Okay, back to the comments. Christopher Arenas says, you lie to yourself. How do you get to evict someone? Climbed from the bottom with no support, only to Voltron, folks. So this was like a short that I did, okay, a little while ago. Basically, I had someone say that to me that housing was a human right. And I actually got a lot of comments on like Instagram and stuff. And I think I got some a good amount of views on YouTube as well. Excuse me. What do you guys think? Let me know in the comment section. Is housing a human right? Yes or no? Yes or no? And we're going to get back to that next time. So Carnivore Chocolate says, thank you. What if a family wants to bring in 2 more foster kids that are related and need to use a HELOC for about $15,000 to finish addition and can pay off within a year? So like I said here, if you could pay it, if you know you could pay it off within a year, go right ahead. Go do it. As long as you have a way to pay it back. Now, that being said, if you have a way to pay it back within a year, why not just pay, not use the HELOC? I like to use HELOCs for something that's going to make or save me money. This, as great of a thing as it is to bring in foster kids, it's not making or saving you money. So I wouldn't really go rush to put my house on the line in order to do so. I would just take the 15 or save up for the 15 and do it like that. But I mean, your situation may be something that I'm not familiar with for sure. Back to the comments. Another Kira question. Jay, I have a question. What do you mean by not using your HELOC money to put down on a down payment for any investment property or for a primary property? I'm considering taking a HELOC out on my primary home and using it for a down payment to purchase an investment property. I live in California and homes here are too expensive to buy cash. That is why I would use the HELOC money for a down payment on my investment property. Can you explain? I would really appreciate it. Thank you. So you are asking, what do you mean by not using your HELOC money to put down on a down payment for? Okay. I say here, don't use your HELOC to buy an investment property unless you have an exit strategy in place, such as selling it as a flip or doing a cash or refinance after renovations. That is what I would say to you still right now, as I did 13 days ago, Kira. The HELOC is made to be a short-term loan product, let's call it. It has a variable interest rate. There's a lot of stuff that can happen when things are up in the air. When you're holding a HELOC balance for a long period of time, you're susceptible to a ton of different things happening, and you're putting your house that you and presumably your family live in on the line. That means it needs to be short term. You need to have a clear exit strategy in place, and only do it if you're looking to use it to either make or save you money. Now, you could say, well, I'm taking this money from my one house to go into my other house into another house as a down payment to make money. Yeah, that's fine. But what you need to do, the only way, in my opinion, to use a HELOC as a down payment on an investment property is when you're buying an investment property that needs work, that needs renovation. So you could use the HELOC money as a down payment. Okay. Make sure you're getting a good deal as well on this. Go close on a property that you're buying, fix it up, renovate it, get it rented out. Once you get it rented out, then go back to the lender, like a regular mortgage lender or a broker or whatever, and then do what's called a cash out refinance. And the cash out refinance that you get is going to be at a higher value, presumably, hopefully, if you did your work and your numbers right, than what you bought it for, as well as what the amount of money that you put into it. Cash out refinance, the cash you could take out at the closing, use that to pay off the HELOC. Make sure you do that within 2 years. That's it. Don't take equity out of your HELOC, out of your primary residence, and go just put it in a down payment, because the reason for that is the variable interest rate and the fact that the HELOC lender can call the balance back at any time. So let's just say the HELOC lender, you take $100,000 out for a down payment on an investment property. Let's say the HELOC lender, they could call that $100,000 at any time. Do you have a way to pay it off? Yes or no? If the answer is no, don't use the HELOC. All right, back to the comment section. And I appreciate the questions, Kira. Melody N says, do you have no income verification HELOC in New Jersey? I am looking for it for a long time. I don't think so. You're going to need to show income, especially now. JBZ, I'm in SoCal and about to use my HELOC for an ADU garage conversion. I'm expecting 1,500 ADU rental plus extra money I'll be saving next 18 to 24 months of tight budgeting to pay it off ASAP. All right. I mean, listen, first of all, I get a good amount of comments from you guys about ADUs in California. I have no experience with those at all. We don't have those here. I think they're like separate, like when you build behind California lets you build dwelling units behind your property or something like that you can rent out, and they're okay with it. Once again, I have no experience with that at all. But just on a base level, if you're using a HELOC to convert your garage into an ADU, I'm trying to think of what that stands for, actually. Auxiliary dwelling unit, I believe. 1,500 rental plus extra money. Well, where's the extra money coming from? But as long as you have a way to pay it back from that rental income, then be my guest. Listen, everyone's got different risk tolerances as well. You have to be aware of. Back to the comments. Oil field trash. Can I use it to start my trucking company? I would get the money elsewhere to start your business. Don't listen, unless you're like just starting out, which if you're just starting out, I don't think that you're going to have a house with a lot of equity as it is, but don't put your house on the line to go start a business. There's so many other ways to get money to start a business. You can, go look for investors, borrow money from family or whatever, business loans and of some sort. I wouldn't do it. I'd rather honestly take it from credit cards if you have to be honest with you, than put my house on the line. Anything to keep my house safe. Because listen, good luck with you and your with the trucking company. I wish you all the best. But if you look at the numbers, the chances of any business succeeding for longer than 5 years is not high. So if you don't succeed, here's the main question. Oilfield trash 956. If the trucking company doesn't work in 5 years, how are you going to pay back that HELOC? That's the question. All right. Now, Benny871, can I use it for basement development? I think about renting out my basement unit. So I said, how are you going to pay off the HELOC? And this guy says, renting the basement? Well, quite possibly, but let's see what he says. My mortgage renewal is in 2 years. I am planning to develop my basement next year and do a cash out at the time of renewal to pay off my HELOC balance. I live in Canada, where housing prices have increased significantly after COVID. And that's everywhere, my friend. So I have enough equity to pull out from my property. So if you're doing a cash out at the time of a mortgage renewal, listen, it seems like you have a lot going on, a lot in the air, up in the air right now. If you're going to do a cash out at that point, why not wait till you do the cash out, then use it to redo the basement? Why put more debt on the property with a HELOC in order to finish that basement? That's my first thought, to be honest with you. Okay. So let's see here. We are back. And back to the comments. Dude is very informative. The first one explaining HELOC in full details that I can understand. Well, I greatly appreciate that, Lorenzo. And look at this, Mr. Bindus. 6. Just pulled 150K. Should I buy NVIDIA with a HELOC, I presume? No, don't do that. Any NJ HELOC that doesn't need W-2 income, you're going to need W-2 or a 1099. You're going to need to show income for a HELOC at this point. FHA, 5% down, good option for house hacking. Planning on waiting until 2025. It always. FHA is a great way, probably the best way to house hack. Now, if you don't know what house hacking is, it's basically when you buy a property that's like a 2-family, right? And it has to be a owner occupied home. And since it's an owner occupied home, you're allowed, if you'd like, to use an FHA loan, which only requires 3.5% to 5% down payment. So for a very low down payment, very low, you're able to get yourself in the door on a multi-family property where you're living in one and you're renting out the other. Now, since a couple different things happened, obviously, rates have gone up significantly, property values have gone up significantly. You're only putting 5% down. You're gonna have that along with the interest rate that you're paying. You're gonna have a pretty hefty mortgage to cover every month. But that being said, it still will be covered somewhat. It's not gonna be covered, 100% like it used to. It's gonna be covered at least something by the rented out unit next door. And just like anything else, fixed monthly payment every single month. The rent goes up and the payment stays the same and the value of the property goes up. And hopefully at some point the rates do go down. You could refinance. House hacking is the best possible thing you could do to start your real estate investing journey, in my opinion. And I think most people agree with me on that. Okay, we'll do a couple more here, guys. Melody N says, any DS, I think she means DSCR, and I said DSLR. HELOC in New Jersey. DSCR is different. That stands for debt service coverage ratio. Those are loans that you use to buy a rental property, and it uses the proposed rental income in order to qualify and not your income. So if you're self-employed, you don't show as much income as you need. DSCR is the way to go in order to buy a rental property. The rates are a little bit higher, but it is, and sometimes you got to pay a point or something, but it's a good option. One of the best options in this market to use as a loan on an investment property long term. I've made a video about this in the past on a DSCR loans. Check out my check out the channel if you'd like to check that out. And let's do 2 more. One more from Melody. Question: do you believe velocity banking to pay off mortgage earlier? I have no idea why people would take a 10% HELOC and pay off a 3% mortgage. I tried to figure this out, why people do it, why people have some sort of idea that this is a good idea. I can't figure it out. This is not my forte. I'm not an expert in it. But that being said, a lot of people swear by it for whatever reason. So I don't know anything about velocity banking. I tried to figure it out. It went over my head. Maybe I'm not smart enough, but it just doesn't seem to make any sense. Like, why play games with a all-time low mortgage rate that you have using a 10% HELOC? Just pay off the mortgage every month. Use your HELOC on other stuff safely. And let's do one more, guys. So this is from Shelly Carlsworth. I had a $50,000 HELOC from a credit union. My late husband and I used it to buy 2 vehicles. Not good. We always paid back what we owed in several months' time. My husband died in 2014. I'm sorry for your loss, Shelly. And then the credit union wanted me to prove my income to maintain the HELOC. I should have done that, but I said just cancel it. Now I think I want a HELOC. I have a $2 million mortgage-free home. Wow, good for you. My credit score must be excellent. I have not checked, but I have no debt and always pay my bills on time. I'm in California. What will the fees be? So, Shelly, very unique situation here. So, sorry for your loss, first and foremost, back in 2014 of your husband. That original HELOC would have, come to you'd want a new one at this point anyway, because you have $2 million of equity in your home from what you're telling me, and not just 50,000. So you probably know at this point you shouldn't have bought 2 cars with it. But that being said, you paid them off, and that's, it is what it is. Live and learn. I don't know exactly what you're asking me other than what the fees are. The fees shouldn't be very much of anything. Most HELOC lenders My HELOC I got for nothing, like zero out of pocket. There may be $100 application fee, $100 annual fee. It's small, minute little stuff. There shouldn't be any fees or closing costs at all. Now, if you are asking about the rates could be something 9.5 or 10% at this point on a HELOC. So keep that in mind. By the way, I did have a bunch of people ask me if I guess they weren't understanding how interest rates work on these HELOCs or really any loan for that matter. Okay, so if you're paying 9%, or let's say 10% on a HELOC, and you have $100,000 on the HELOC balance, the 10% interest rate, that doesn't mean that you're paying $10,000 every month. That's throughout the entire year. So 10,000 divided by 12. And that's an interest rate, not an APR, so it could vary slightly. The balance may go up or down slightly depending on a few different things, whatever. But these interest rates, that doesn't mean that your monthly payment is going to be that. That's your payment throughout the entire year. So divided by 12 and it'll give you a very, very good idea. All right, guys. I didn't see any chats from you guys. A few of you are watching, so I appreciate you watching. If you have any other questions, drop a comment in the comment section down below. You could also go on my website, realjaycosta.com, ask me any questions there, as well as our Discord server, which I put a link to in the description box down below. So if you know Discord, we're slowly building that up as well. As always, appreciate your time. Let me know what you think in the comment section down below. Would love to start a conversation with you, and I will see you next time.